Hello and welcome to WION special coverage. Today we are being joined by Mr. Gaurav Sharma. He's an energy market analyst, live joining us from Abu Dhabi. Welcome to the broadcast, sir. Sir, before we get into the specifics, I wanted to ask you on a broader level, how do you see Trump's return impacting the global energy landscape?
Look, if you take the Trump's presidency, I think it's price positive for the energy markets. At least that's what people thought on paper. If you go back to 2016, he came with a very pro-oil, pro-natural gas credentials, and that was then borne out within the next sort of 5-6 years that the United States today is the world's largest oil producer and it also happens to be the leading LNG exporter, having overtaken Qatar last year.
Great. Sir, coming to the global oil and gas investments, now this landscape is obviously very volatile, of course, multiple reasons. How do you see the investment pattern shifting in the US, especially after Trump's return?
I think if you look at the investment climate in the States, it's going to materially shift because it's going to shift in line with the shifting of global oil demand and how it's regearing. So as I see it from an analyst perspective, global oil demand within the next 10 years is going to regear and reorient more and more towards aviation and petrochemical, while ground transportation gradually goes in the direction of electrification. This is not going to happen overnight. You're looking at about a 10-year window. So the investment climate, the investment dollars would be spread across the board. And you know, in recent weeks, we even had Mr. Trump say that he loves solar. So in that respect, it is still a bankable sector to invest in, except that there'll be several investment avenues, oil and gas being one of those.
Sir, I wanted to ask you, with the America First policy now possibly returning, how do you think the global supply chains are going to be impacted by that?
Very good question. I think this is the profound question to ask here when we are talking about a Trump presidency versus oil markets and oil prices, let's say within the next 3-4 year window. Now, he said an America First policy. An America First policy also entails promoting US oil and gas production. Now, what we see here is a president who's pro-oil. We've seen at various points earlier in the year that OPEC has sort of balked from increasing its production. And each time they go up, the prices go up by $3 or $4, $5. It doesn't last because demand is not very good and there's a lot of oil in the market. But at this point in time, various US players, various independent, especially independent smaller US producers, they hedge their bets, they take positions, they protect the prices, take a hedging contract that for the next 12-18 months. Now, let's say Mr. Trump comes in, he ups the ante and he says we are cool with our oil companies producing at a fair decent rate. They're already producing 13 million barrels per day, the Americans. That comes up, oil production goes up, at the same time demand is not what it's cut out to be. So if demand is not what it's cut out to be, the prices come down, but the American producers are still in the game, causing thorny issues for OPEC. The prices will probably trend lower. I'm not very bullish in this market. I still suspect that it's a fairly lukewarm market. The demand in China is not cracking up. So we're looking at fairly lukewarm prices, yet higher American production and more American light sweet crude barrels heading to Asia.
That brings me to another question. Now, with US eyeing to be a major oil and energy exporter, how do you think the traditional alliances are going to play out, especially for India, China, and Europe?
Absolutely. I can tackle in terms of the big five oil and gas importers and consumers. I think what you're looking at is a little bit of a cooling of relations with China. We could see some protectionism from the US side. There'll be a lot of warmth towards the Modi administration. And what I would say is that, I spoke to the Indian oil minister, Mr. Hardeep Singh Puri, in September when I met him in Houston. And his take was that there are not an awful lot of countries out in the world who buy north of 4 million barrels per day in the current climate, in the current energy environment, in the current climate. So what Mr. Puri says has a point. So if Mr. Puri's intention is to protect the Indian consumer and Mr. Trump's desire is to export oil, more American oil, OPEC sort of kind of loses out, because American policies will keep oil prices competitive. There won't be an overshoot to $100, which is good for the Indian consumer and definitely good for India's government. Now, Japan and South Korea, they again have declining demands. They have a plethora of resources to call upon. But I think they're as well positioned as India in terms of taking American light sweet crude.
Great. That brings me to the last question. How do you think the EV industry is going to thrive under Trump, especially now since Musk is part of his inner circle?
Look, this is a bit of a loaded question, because Trump on the one hand says, you know, we have more oil than the Saudis, than the Russians. So yes, I mean, it can be balanced out. That said, the EV market is quite substantial in the States, and Tesla is a global premium brand, I should say. It's not a people's electric car by any stretch of anybody's imagination. So that is likely to last, but the EV revolution could take, you know, the big American autos, the Chevrons, the Fords, to the next level. The question is, how does this all balance out? The thing is that when you look at the biggest American EV market, which is California, it is being, the EVs are there, the electric cars are growing, but they're plugged into a grid, electricity grid, that is largely serviced by coal and fossil fuels. So maybe Mr. Trump and Elon Musk can find some common ground and improve the grid's reliance on fossil fuels. That could be the takeaway.
Well, thank you for your insights, and thanks for joining us at WION.
Pleasure, thank you.